In this video, we're going to quickly look at 3 stocks that tend to perform really well in late January and February, and one of them actually extends into March. But this is important because the S&P 500 does not perform well in January and February. It's pretty flat. In fact, over the last 20 years, if you just invested in the S&P 500 during January and February, the average return for those 2 months would have been 0.1% per year, just if you held for those 2 months. So pretty much we can say stocks are basically moving sideways during this period. So to find some stocks that can potentially rally and do much better during this period, well, let's take a look at what they are. So MSCI, each of these stocks has a trade date. This is optimized over the last 15 or more years. And so for this one, it's January 20th to February 19th. Buying that on the open and then selling it on this February 19th close results in a 5.3% average return during that trade period for the last 16 years. That includes all winning and losing trades. And it has finished higher or has moved up because this is a buy on January 20th. Has finished higher during this trade period in 13 of those 16 years. So an 81% win rate for buying here and selling on February 19th. Largest profit during the trade period was 19.63% in 2020, and largest loss was 9.6% in 2010. So there are some losing years, of course, and this does not just mean the price just goes straight up between January and February. This is an average return, so you're going to have some bigger wins, bigger losses. Wheaton Precious Metal, January 22nd open until the February 12th close, 6.88% average return during that trade period over the last 18 years. So that's the average return just for holding between January 22nd and February 12th. And it has finished higher during that period in 15 of those 18 years, or 83% of the time. Largest profit, 46% in 2016. Largest loss, 10% in 2018. This is Ulta, not Ultra. Ulta Beauty, ULTA, January 20th open till the March 26th close, so a little bit longer term trade. 8.2% average return during the trade period over the last 16 years, and it's finished higher during that trade period in 13 of those 16 years, 81% win rate there. Largest profit during the trade period, 35.5% in 2011. Big loss in 2020, 30%. So this kind of shows that even though sometimes the average profits are big, you can have some big swings to the upside or the downside. So this is what we call the study of seasonality. It's the study of the past. It's looking at how certain assets perform at certain times of the year. Some things to keep in mind and some risk management tidbits here. There are no guarantees that these patterns will continue to play out in the future. We do not know what is going to happen this January, this February. In the case of Ulta, what's going to happen in March. We don't know what's going to happen with these stocks this year. All we know is that they've performed well during these periods in the past, but this year, no one knows. They could be more or less profitable. If using seasonality, it's recommended to combine it with risk management and other forms of analysis. So those are 3 stocks, 3 ideas that tend to perform well in late January, February, and into March, when the rest of the market is just moving sideways.